Hello and welcome to The Hash. Happy Monday, by the way. We are coming to you with the latest in crypto news. We're going to discuss that at length shortly. A quick programming note, we're doing some special coverage from the SALT conference this week out of New York City, today through Wednesday with our very own Christine Lee. Some really great interviews. I think SCARAMUCCI'S was on earlier. We're going to be talking to SBF, Jeremy Allaire, Brian Brooks, and more. And that's just tomorrow alone. So tune in to our special coverage from the SALT conference later today. Okay, back to the hash. We are here. It is Monday. And Jen, you have our first story. Take it away, please.
All right. So a fabricated press release made its rounds across trusted publications this morning, CoinDesk included, saying that Walmart intended to offer customers the option to pay with LITECOIN. So I myself was confused. I saw the news break on Twitter. I checked the price. LITECOIN was up 30%. Then I saw tweets questioning the email in the press release and the fact that it wasn't in the Walmart newsroom. And then that price came crashing down. So a lot happening with this story this morning. Zach, I'm going to kick it right to you. What happened?
I mean, it's just an embarrassing hoax for mainstream media and crypto media alike. You know, CoinDesk fell for this one as well, along with CNBC, Reuters, The Street, a ton of people bit on what was a fake press release. And that's a really embarrassing F up by us and others that had major implications for the rapid ascent and descent, pump and dump in crypto terms, that followed shortly thereafter. So yeah, this speaks to the adversarial media environment that we work in crypto media, and it's really embarrassing, and I'm kind of in a bad mood about it. So yeah, I'm going to pass it to Naomi before I swear again.
You seem so down, Zach. I can't even get over how
this is a grave sin for news people everywhere. Yeah, this is terrible.
Well, but at least you can own up to it. For sure. Let's dig into the details of what happened. So apparently Walmart-corp.com, which is the email address that was used to send these press releases. And obviously there are these wire platforms out there where people can send press releases, news agencies pick them up, and then they use that information to build their stories. Apparently this email address, this email domain was registered last month and doesn't go to any official website. I mean, it was pretty sneaky, like just registering something that looks very similar to something that's kind of official looking, but it was a completely fabricated address, and the domain had nothing to do with Walmart at all. And it's kind of interesting that there are all kinds of inventive new ways to manipulate prices these days to try to get a bit of a pump and then dump. It's a fascinating space, but also fascinating to see how the media world works. Because like you, Jen, I fell for this as well. I saw this story get released, and I was like, what? This is huge news. I immediately went to Google. I just typed it in, and boom, boom, boom. Because I was like, is this fake? And there were like 8 major outlets that were covering it. I was like, there's no way this could be fake. Obviously, there was a way that this could be fake, and all of those outlets fell for it. So just super interesting. But I'll throw it back to you, Jen.
Yeah, it's such a new industry, and a lot of the publications you mentioned there, Naomi, only really started reporting on crypto recently. I know CoinDesk, obviously, we've been at it for a much longer time, but I think this is essentially a scam, right? We've spoken about how easy it is to publish a press release before. It costs probably a couple $100. You need someone with kind of good writing skills, and there you go. You can publish a press release, and that gets picked up by mainstream media. Well, I'm gonna kick this to you. We've spoken about how easy it is to publish a press release and dupe the media, especially in crypto. What did you take away from the story this morning?
So I woke up a little bit later and saw the headline, the corrections, because I'm in Mountain Time, not Eastern. So it kind of came from a different point of view, where I just saw a lot of corrections across CNBC, Reuters, elsewhere. And just looking at the past and the history of corrections in the space, I mean, they happen and they're extremely frustrating, whether you're on the side of the pen or not. If you're a reader and you lost money on something like this because you jumped into Bitcoin, you jumped into LITECOIN or some other coin because you saw a headline like this, which obviously would have major implications for the space. That is frustration, and that would really suck. On the other hand, I think it just kind of speaks to like how young this space still is. So like Reuters has kind of only been in crypto for a little bit, And so they can make mistakes on the crypto angle. And then some of the crypto native publications haven't really been in the business world for as long. There's some really great leadership in place, but they don't often deal with like these press releases as much, and that's where you kind of get like these problems come in, because equity firms do this too. There's people who scam equities and they pump the price of those equities via press releases, and then boom, you have the same thing happen here. So I think it's just the takeaway is the most important. Like, what's the next best step you can do as a media publication, and that's just learn the lessons from it. So Naomi, your thoughts?
Yeah, I want to take a different angle of this. This kind of gave us a taste of what it would look like if Walmart had accepted LITECOIN, the frenzy, the excitement around it. If you read this press release, the fake press release that was put out, it says things like Walmart has long been one of the earliest adopters of blockchain technology, starting as early as 2016 to trial the digital ledger for improvements in its supply chain. Like, there's a lot of meaty stuff in there that would support a decision for them to get into crypto. They have been looking to hire in this department. They have been experimenting with blockchain technology in the past. And so it seems like a natural progression to them to eventually accept crypto. We've talked about it on the show before, talked about how Walmart really is sort of a payment process, a hub of sorts. It's a place where people go and they can pay their bills. So if they got into the crypto space and allowed people to actually use crypto directly there, it would be huge news. So Walmart, if you're watching this, if you like the excitement, you liked the point of view of all the press articles that came out that were excited about this, maybe consider getting into crypto, because I think it looks good on you. But let's change track. Zach, what's going on?
Spin. I love how you turned that around, Naomi.
I learned from the best, Jen. It's all coming from you. But Zach, I'll throw it over to you.
All right, let's talk about NFTs. Let's talk about NFTs from the Mooch. Anthony Scaramucci launching an NFT platform, and it launches with booze, A, and B, his face in this cool art thing, which is just it's so nice. It's so perfect. This is one of those NFTs where it's like you get more than just the NFT. You get the whiskey, you get to hang out, you get a ticket to ride, and that's what this is being offered as. These NFTs are going for, I think it was 1 ETH, so that's about $3,000, which would be a pretty expensive bottle of whiskey. But when you roll in the world that the Mooch rolls in, maybe, hey, that's not so much after all. Interesting to see this. I think it's on Polygon, on the Matic network, best I can tell. So making a bid away from some of the expensive transaction fees currently plaguing the Ethereum network. But yeah, this NFT thing just keeps having legs and just keeps on going. This is the latest thing that we're seeing. Rare whiskey from Anthony Scaramucci. I'm going to toss this down to Jen for her initial thoughts. What does this say that, the SKYBRIDGE founder is launching his own NFT platform?
Well, I was reading it. So the platform's called Flatter, right? And as I was reading the story, I had the immediate thought that, do we need another NFT platform? So I continued reading and I was like, okay, this seems like it's targeted at business people. It's around the conference experience. We haven't seen that yet. And then I continued reading, and the last line in the story says, and they plan to launch for sports memorabilia. And so now I'm confused. I think that, the sports memorabilia thing has been done. It's been done by people with a lot of clout and a lot of experience in that sector. And so I think this is cool if we're addressing a part of the market that has not yet been addressed. And it's kind of interesting to think about it for conferences. I don't know if there's a lot of legs there, but now we're talking about sports memorabilia, and it feels like there's not really a plan. It's just like NFTs are cool. We're going to get into it. We're going to make cool whiskey bottles and just see what happens. So that's my take.
Whiskey's cool. I mean, we said the same thing about when Tom Brady did it, and then Tom Brady's autograph became like a major platform that partnered with DraftKings and got normal gambling degenerates excited in the NFT market as well. So I think, cool whiskey bottles and access perks, there may be a market for that. And I think it's interesting to see that Scaramucci is continuing his crypto journey, right? This was a guy who was big on Bitcoin, went into some alts, and now is full circle to its own NFT platform. So interesting to me to see it. I'll toss it to Will. I mean, who do you think this is targeting?
Yeah, it's kind of setting aside the targeting angle here really quickly, because I want to focus on something else. I will note that like Scaramucci getting into this just kind of adds the whole like aesthetic luxury brand that we've seen like other brands getting to like the Gucci's of the world, like launching their own NFTs. That kind of makes sense for NFTs, especially when you have like a physical thing like a whiskey that you can buy and associate with him. It's interesting on like the tech side that's on Polygon, because you always think like, oh, it's like if it's an NFT, it should be on like the biggest base layer, it should be like on Ethereum. But you can move Polygon NFTs to Ethereum just through a bridge. So like that Ethereum kind of stays as like the center of this NFT universe, so to speak. That comes at the time where like Solana is popping off with all these NFTs and I know Tezos has really kind of popped up and come back into the limelight with its art NFTs over the past few weeks. So that's kind of the interesting side for me, kind of a nerdy angle, but like the tech side is interesting to me. Naomi, what do you think when you saw Scaramucci selling whiskey for money?
I said that makes a lot of sense to me. I think it's cool that he's kind of going after the conference space. I think that the digital gift bags are going to become increasingly interesting. At conferences, you always end up with a ton of swag. Now, if you go to a crypto conference, it makes sense that it should be crypto swag, not like little postcards or stickers or things in the physical world. Exploring what kind of goodies we can give to people in the digital world is definitely something I think we're going to see more of. So it's interesting that he's doing a little bit of both. He's doing like, goodies, but also you've got this digital thing that goes along with it. So I think that's kind of cool. I'm looking forward to see those things evolve more, that things that could actually do stuff. We're starting to see a little bit of it. I mean, technically they're saying, well, this gives you a meeting, but I would love to see that kind of built into the technology. I want to see us get inventive with that stuff. I want to see something to do with the technology of the NFT unlocking something at the conference. Like that type of stuff would be really cool. But we can speculate as much as we want on that, and we'll start to see how these things evolve in the space. But Zach, what's coming up after the break?
All right, we're going to take a quick break, and when we get back, we're going to talk about Coinbase. They are like doing some crazy like bond offering or something like that. I don't know, but Will's going to break it down for us, and we'll talk about what that place is up to. Stick with us. It's The Hash. We'll be back in a second.
Hi, everyone, and welcome back to The Hash. We're going to dive into what's going on in South Korea at the moment. So apparently the majority of Korean crypto exchanges are said to shut down later this month. The South Korean government issued a whole bunch of new requirements for crypto exchanges there. They have to meet all kinds of new compliance requirements, and that deadline is coming up soon, September 24th. These exchanges need to submit requests for an official license with the Financial Services Commission. A lot of smaller exchanges have contested this new requirement, and it said that about 40 of what's estimated to be around 60 crypto exchanges in South Korea will be shutting down. Obviously, the bigger ones will probably stick around, the ones who probably will have an easier time getting these licenses. So it's a very interesting story that obviously is said to be in the name of protecting consumers, but we can dig into the details of it a little bit and see whether that's the case. I'm going to throw to Will because he just had a dog in the background, and I'm hoping maybe the dog has something to say as well.
Dog.
he has something intelligent to say. I can tell you that. South Korea does have like a troubling history with crypto. There's a lot of adoption in the area, which is awesome. There's some really, really cool projects in South Korea, but they do maintain like pretty strict regulations compared to other countries, which has given rise to phenomenons like the kimchi premium, which is where you saw like the price of Bitcoin trading in South Korea trades differently than the rest of the global market. And that actually gave rise to FTX and Sam Bankman-Fried, because he used to hop on an airplane between Japan and South Korea and collect that premium on the price between Bitcoin between those two countries. And there's also been like other regulatory things, like they've cracked down on privacy coins in the past and forced those coins to be taken off exchanges in South Korea because regulators are not fond of them. And there's also just been like more scrutiny on exchanges that are in South Korea writ large. So just like the context and the history there is South Korea has just had like a different view of cryptocurrencies than the rest of the global market. And increasingly, it kind of looks like what the US looks like right now, where there's just like a bigger eye on the industry itself. In terms of like shutting down these exchanges, I don't know. Like I'd like to see some more reporting around this. It does seem like a very big move just to be shutting down all these industries because writ large, like South Korea does have like a very big cryptocurrency population. It's one of the highest nations for adoption of cryptocurrency. So it would be odd to see the regulatory pressures there shut down such a burgeoning industry. Jen, I'll throw it to you.
Yeah, it's so interesting you bring up Korea's history, Will, because I've always associated Korea with innovation. You know, so many things happen there much faster than they happen for us here. And so I guess I haven't really followed the crypto industry there as much as you have in the past. So that was an interesting take. I wanted to talk about the kimchi coins that the article points to. So these are smaller altcoins traded against the Korean won. And the article talks about how this new regulation is going to push people to do something similar to a bank run. And a lot of people are probably going to lose a lot of money. And so we think about the regulators and them outlining their reasons behind this very strict regulation. And it's always to protect retail investors. And in this very specific situation, it's the retail investors who are going to lose the most. And so I think it's really important to put things into context when we listen to regulators say that, you know, this is all for protecting retail investors, because I don't think they're thinking ahead, or maybe they just don't care.
Yeah, and I'll jump in there because so part of the obligation that they're required to go through with is that all exchanges must show evidence that they're operating using real name accounts at South Korean banks, and this vetting process has kind of been pushed to the banks themselves, who have, for the most part, refused to engage in any risk assessment, except for the country's top 4 trading platforms. So this isn't a question of whether this industry is going to be shut down in the country. It's not. You're still going to have major operations there who already have, you know, like 90% of all of the trading volume. This is just going to shut down all of the smaller ones. I mean, really, it's a typical situation of the government picking winners and losers, putting in burdensome requirements that only some people can comply with, because obviously the banks are more comfortable vetting the larger platforms. They're not going to go near the smaller ones. It means that the smaller ones will miss out on these licenses, whether they're actually, you know, legitimate or not. So it's a really sad situation. Actually, it's very anti-competitive, and I feel really bad for all the people who've been trying to build businesses there in the crypto space. But Zach, I'll throw it to you.
Yeah, I think this kind of just occurred to me actually. So Terra, which is like the bright light of the Cosmos ecosystem and based in South Korea, has really demonstrated, I think, a big appetite for decentralized exchanges in that market, and could be similar to what we see play out in the US in the future, if we are to interpret recent actions by the SEC as indicative of where things are headed here. So the fact that there is sort of an established Terra ecosystem in that market is suddenly all the more interesting to me. And it could be something that we see play out in other jurisdictions, this sort of like flight to decentralized as regulators crack down in some way, shape, or form. So the idea that this is going to kill the market, I think probably not. I mean, obviously those big players are going to persist, and there's clearly an appetite for some of the bigger decentralized exchanges in that market. So it's interesting to see how it's going to unfold given those two variables. But yeah, Korea crypto news is always like really interesting, and it's like also really hard to pin down. I think we've been speaking of past embarrassments, like we've been burned on Korean news in the past because the news culture there's a little bit different, and it's just interesting to get to the heart of the matter sometimes. But hey, that's our job. So that's what we're here to do. I think we're going to change gears, and I think Will is going to hit cleanup here just to get a baseball pun over to my guy Will, who's a big baseball fan.
Let's talk about Coinbase, and let's talk about a lot of money. So Coinbase is planning on selling up to $1.5 billion of debt through a private offering. The notes would be due in 2028 and 2031, which is crazy to think that is almost his entire lifespan of crypto so far has been about 12 years, and these notes wouldn't be due for like a decade and then another decade past that. Actually, just like 15 years, yeah, total. So that's pretty wild to think. Anyways, aside, these notes would just allow Coinbase to leverage money to be able to acquire other firms or kind of expand their operations. Coinbase, of course, is kind of moving into that neobank position where they're able to offer lending accounts and borrowing and interest rates with cryptocurrencies themselves. That kind of happens around the stablecoin USDC, which they are right now in some sort of like food fight with the SEC about. So interesting to see them kind of using the public markets to leverage debt in a similar way that MicroStrategy did so to buy a bunch of Bitcoins. And I'd expect to see this continue with other firms going down the line. Zach, I want to throw this to you, get your thoughts on $1.5 billion of debt equity for Coinbase.
Yeah, it's a big number. Coinbase, big company, big ambitions. Yeah, I think the timeline, that's what stood out to me as well, right? I mean, they're playing this for the long game. And if this is a way to do that, then, hey, they're going to do that. I would love to see who they acquire with some of these funds, as you alluded to. Really curious to see what sort of late stage Coinbase ultimately ends up looking like as they enter their next chapter of being a big publicly listed company that isn't technically headquartered anywhere, according to SEC documents. So interesting to see what materializes and what their play is in terms of new product offerings. But yeah, that's pretty much what I got. I mean, Naomi, I'm going to kick this to you. Is there any like analog here to like what MicroStrategy has done around their various ways to sell debt? Do you see any similarities there? Or is it totally different?
Probably similarities there, but I've always considered Coinbase to be kind of a Bitcoin proxy stock just because of their business. What's interesting is what they say they're going to be using this money towards. So they're going to be use it to invest in product development, in future acquisitions of other companies or technologies. Like I'm always interested in what Coinbase is going to do because they just played such a smart game so far. But the only and it's a giant question mark, if we're being honest, that hangs above it is what's going to happen with the SEC, because really they are at the beginning of what could be a major battle. They've, come out very publicly and said, basically, we're going to fight this. Not so many words, but they've been very public about how there's confusion around this. They don't believe that they're offering any securities. They don't believe that the process of lending money is considered a security. And so it's just very interesting to think about how this is going to play out when we're talking about like late stage Coinbase, what that's going to look like. It could go in any direction, right? The government has the ability to really shut down a lot of the things that they might want to go into. If they're looking into all of these innovative new financial products they're wanting to develop in that area, I mean, SEC's ruling could really curtail that. So I hope that that's not the case. Coinbase, as we said, it also has a lot of resources behind it to fight the SEC. What I predict is probably going to happen instead is that there'll be a fight, but there won't be any sort of clear precedent set because it'll all be settled behind closed doors. It'll just cost Coinbase a whole bunch of money that they could have been putting into investing in innovative new products. And instead it's going to go to lawyers' fees and all of that, which is always the process when you have these dumb battles. But, a good case scenario outcome of this would be that maybe we get some precedent and Coinbase is able to really fight this on behalf of the crypto space, being one of those kind of foundational strong points of crypto. But I'll throw it back to you, Will.
Yeah, the interesting takeaway from me from this is that $1.5 billion is nothing to blink at, and we were supposed to have cryptocurrency as sort of the way to cut out middlemen, and yet here we have like a new entrenched player in the middle of all this. Like Coinbase is leveraging all that debt because they have the expectation that they will be able to pay it off via the cash flows they get from their business model, which is cash flows from people using their services to transfer money around or purchase crypto assets themselves. So like they're extracting all that money from their customers, which those customers obviously think it's good it's in their interest to use Coinbase. But at the same time, like that wasn't really in the ethos of cryptocurrency at all. And even Coinbase in its S1 said that like decentralized finance is very much so a threat to their business model. And yet here we have them trying to get $1.5 billion with the expectation they can pay it off using their centralized venue going forward. Zach, I'll throw it back to you.
Yeah, I mean, that's the big question to me is like, what is Coinbase's DeFi strategy, right? Like, what is the Binance Smart Chain of Coinbase? And I think if the SEC is kicking the tires on this LEND product that is seeking to match existing products already in the marketplace, that might be a significant hurdle to jump over as they become a bigger and bigger entity in the space with a bigger and bigger target on their back. So super duper interesting. I wonder, I mean, Coinbase Ventures has been active in the space across DeFi and has a lot of investments. I'd be curious to see sort of who comes into the mothership and what their play looks like going forward. Jen, what do you got?
Well, everyone has kind of addressed my question, but we're talking 7 to 10 years from now. We don't know what's going to happen in the regulatory space. We don't know what's going to happen with the centralized exchange. Should Coinbase stay centralized? And so is this not risky for firms that provide debt? Like, is that a concern that they should be thinking of?
Well, without big risk, you can't get big reward, Jen. So yes, huge risk. But I think equally as interesting upside on this, if Coinbase continues to be a leader in this field, if they continue to have really smart people developing products, if they go down the DEX route and they're making a ton of money that way, I mean, there's a lot of ways that consumers could be very happy with taking a gamble on that. But obviously, a big risk, people will have to figure out their own risk profile for something like that. And maybe they're better off just betting on an actual crypto asset itself. But Zach, I'll throw it back to you.
Yeah, I mean, Jen, good question. To your point, I don't believe press releases anymore. Today is not the day for press releases, but I saw a press release from S&P Global that had already assigned Coinbase BB plus junk rating, I think, on the new offering. But hey, we'll get to the bottom of that one as well. All right, let's take a break. Okay, what's your question?
One question. If there was a Brian swap, decentralized finance, what would the token be? What's the token ticker?
Oh, that's a good one. Has to be a food.
Based.
Brian swap.
Based coin.
Based coin.
Already out there.
We could do so much better than that.
We're gonna have to think about it. Let's start the show tomorrow with giving people ideas. Boss coin.
Debase God. We'll get Lil B Debase God, and he'll be the #1 Coinbase ambassador for their T5 project going forward. It's going to be awesome. It's going to be based. All right. We're going to take a break, but that break is going to be like 23 hours and 30 minutes long. That's what I meant when I said break. Control. God.
I was confused also.
We're going to need to desalt. I'm going to need to desodium for tomorrow's show, but we do have special coverage from the SALT conference today, tomorrow, and Wednesday. So stick around, 3 p.m., all about Bitcoin. We're going to have some special coverage from Titans of Finance here in the great city of New York. So thanks so much for tuning in. It's in the hash. I'm Zack Seward. We got Naomi Brockwell, Jen Sanasie, Will Foxley. We'll be back tomorrow to talk about more in the wild world of crypto news. Thanks so much. We'll talk to you soon, and have a good week. Thanks.
Bye-bye.
Bye.